Here's a stat most people get completely backwards. The average actively managed stock fund, run by Wall Street professionals with billion-dollar research teams, has underperformed a simple index ETF by over $1,200 on every $10,000 invested over the last decade. Not once. Consistently. Every year. So if the pros can't beat the market-picking stocks, what makes you think you can? That's not a knock. That's the most important question you'll answer before you invest your first dollar. Here's the thing. Every beginner asks the same question. Which stock should I buy? And every YouTube comment section has an answer. Tesla, Apple, Nvidia. Buy this, hold that. But picking individual stocks without a framework isn't investing. It's gambling with extra steps. Most beginners lose money in their first year not because the market crashed, but because they bet on the wrong company at the wrong time. Let's start with what an ETF actually does for your money. Think about it this way. Buying one share of VOO, a popular S&P 500 ETF, is like buying a tiny piece of the 500 biggest companies in America. Apple, Microsoft, Amazon, Google. All in one purchase for around $530. To own even one share of each of those companies individually, you'd need over $4,000 just to get started, and you'd still only have 4 companies. With that single ETF, you own 500. If one company collapses, say a tech giant has a bad year and drops $200 per share, your ETF barely moves, because 499 other companies are still working. That's diversification. And it's the single most powerful risk reduction tool available to any investor. One ETF gives you what $4,000 in individual stocks cannot: built-in protection against any single company failing. And this is where it gets interesting. Individual stocks can make you rich, but the math is brutal. Look at real numbers. Over the last 20 years, roughly 7 out of 10 individual stocks underperformed the S&P 500 index. That means if you randomly picked stocks, you had a 3 in 10 shot of beating what a basic ETF would have done automatically. But here's the part nobody talks about. The S&P 500 itself is dominated by its top performers. The entire index's gains are often driven by just 10 or 15 companies. If you didn't own those exact companies at those exact times, your returns looked nothing like the index. Picking stocks means betting you'll find the right 10 out of 500. ETFs mean you own all 500 and capture every winner automatically. The odds of picking the right individual stocks long-term are worse than most people realize, and the data has 20 years to prove it. Managing individual stocks isn't passive. You read earnings reports, you watch news cycles, you second-guess every dip. One bad quarter from a company you believed in costs you $800 and a week of sleep. ETFs require none of that. Buy. Set up automatic monthly contributions. Look at it once a quarter. That's the entire job. Think about what that time is worth. If you spend 10 hours a week researching stocks and your portfolio still underperforms a $0 ETF, you paid for that underperformance with your time and your stress. The richest investors in the world recommend index ETFs for most people. Warren Buffett's own will for his family says, put 90% in a low-cost S&P 500 index fund. Your time has a dollar value, and stock picking costs more of it than almost any return justifies. Here's exactly what to do right now. Open a new tab. Go to any major brokerage. Pick the one you've heard of. Create a free account if you don't have one. It takes about 10 minutes. Search for VOO or VTI. VOO tracks the S&P 500, the 500 biggest U.S. companies. VTI tracks the entire U.S. stock market, over 3,500 companies. Either one works. Pick one. Set up an automatic monthly investment of whatever you can afford, even $50. Turn on dividend reinvestment. Then close the tab. You don't need to understand every company in that ETF. That's the point. The index does the work. Your job is to start and stay consistent. One ETF. One monthly transfer. Let the market do the rest. The only investment decision that guarantees you lose is the one you never make. If this cleared things up, hit subscribe. Every week I break down one money concept. No noise, no fluff. And if you want to know exactly how to build your first ETF portfolio from scratch, which accounts to use, how much to put in each, that video is up next. It's the natural next step after this one. I'll see you there.